Good morning, everyone, and welcome to today's webinar. My name is Alex Paul from InvestorStream, and I'll be your host today. Presenting for us this morning is Hydralyte North America CEO Oliver Baker, who will be discussing the company's operations for the September quarter. Please feel free to send in your questions via the chat platform in the question pane in the GoToWebinar control panel, or simply email them to me at alex@investorstream.com.au. I understand the slide deck is in the process of being lodged on the ASX, so you can feel free to download it from there. Otherwise, the presentation will also be available shortly by navigating to the handouts pane in the GoToWebinar control panel. Finally, a copy of the webinar will also be available on HPC's website and social media platforms later today. But for now, I'd like to throw it over to Ollie to kick things off for us. Ollie, the floor is yours.
Good one. Thanks, Alex. Thanks, everyone, for joining. Today is just a brief update covering off the quarter we just had and some insights into what's happening there, but importantly, giving a bit of a sense of the future and what we got planned for next year. So I'm just going to kind of rip into it. I've got a few slides here, and then we'll do a little Q&A at the end. There's a couple of questions that were pre-submitted. We'll do our best to kind of chop through everything. So yeah, again, thanks for attending, and we'll get stuck into it. So as you all know, we are Hydralyte International. We're the rights holder of the Hydralyte brand in almost all major markets outside of Australia and New Zealand. The company's based in the US. We operate out of San Diego with a small team there, and our focus as a company is on the US and Canada. The brand actually first launched in Canada as its main international market, and it grew from 100-gram business, 100 grand a month, and out of one retailer in Vancouver. We now do over $250,000 a week of retail sales into that market at the moment. So we have a dominant number 2 position in Canada, and then we're one of a few brands operating in what's becoming a mega category in the US. So a lot of exciting things happening in this market alone, but we do own the rights to major markets in UK, Europe, China, and Latin America, and a bunch of others. So quick reminder about what Hydralyte is. If we're looking at the slide in front of you, it's a low sugar, high electrolyte drink mix. That mix, when it hits your gut, it's absorbed immediately into your bloodstream, and that's why it's universally adopted by the medical community when you're at risk of dehydration. Classic dehydration symptoms, when you think about it from a doctor or a clinical point of view, is your heat stroke, your gastros, your cold and flu. All the time when you've lost a lot of fluids, and your doctor will say, rest up and keep your fluids up. That this is to keep people feeling better and back on their feet quicker, but importantly, keeping them from getting severely dehydrated and hospitalized. And because of that rapid absorption formula, it's incredibly useful for everyday life, and it's far more superior than sports drinks, coconut water, or even just regular straight water for replenishing fluids. Water doesn't have electrolytes in it, and so you need electrolytes, a little bit of glucose for the body to absorb it quickly. So that's why pro athletes use it. That's why the Aussie cricket team use it. That's why all the tennis players are given it during the Aussie Open, and why it's a famous hangover cure is because you're able to relieve the symptoms of dehydration instantly. So quick disclaimer there that you'll be able to read on the ASX. So now talking to our quarter that we just had, we've actually had some major structural moves within our business, really, really large, significant things that have taken a lot of investment, but really the hard yards are behind us. We've moved our powder manufacturing out of Europe and now putting some of that into Canada. We've got now a kind of made for Canada product that will be shipping out of there, and it's going to save us a significant amount in air freight. When you're a fast-growing brand, it's very hard to keep everything in stock all the time, and when you run low, it's cheaper to air freight it in than to lose lost sales. So we've had an air freight bill into the multi-hundreds of thousands of dollars over the last couple of years, and this new change is going to mean less out of stocks. We tweaked the flavors to make them better for that market, so overall a really nice improvement in cost of goods. And then we just changed brokers up there to a group called LeBeau-XL. LeBeau-XL is one of the leading health and wellness sales brokers up in Canada. Significantly, they sell well outside of pharmacy, which is where all our sales are at the moment. They're into the Whole Foods and the health and wellness space. but also we're going to see a significant gross margin improvement, and you would have noticed that in our recent numbers, if you were having a look at them, that there was already a pop in our gross margin. So we began shipping with them as our primary sales force in this quarter. It has meant some really kind of, tricky changes in the way we ship to retailers. We actually have to set up new vendor relationships with every single retailer, and we have to ship out of a new third-party logistics facility. And so that creates for wonky orders, and that's why you're seeing subdued growth in our shipments that's not really reflecting reality. We've had kind of what we call kind of wonky factory sales that don't reflect the regular orders of what's selling off shelf. So we expect that to normalize back to where we were in this quarter, and very optimistic for what LeBeau can do to expand our sales presence in Canada. So if you just look historically, this is the historical Hydralyte business. It's good to remind people kind of where we've been from and what we're capable of. We've pretty much kind of tripled the business over the last 5 years. Last 12 months, we've just surpassed 10 million US dollar. These are all US, yeah. So with the Aussie dollar at the moment, this is about 16 million bucks in US dollar sales. So that's a pretty significant brand in Australian consumer space. So it's a good opportunity just to be a listed Aussie entity that's banking USDs every day is actually one of our great point of differences. And then you'll see as well with our gross profit, what we've been able to do there to take it from, we're almost talking kind of 4.5x times as big from where we were back in 2019. And, we're well into the high 50s now in terms of gross margin. So looking at this quarter in detail, you'll see again more sales growth off massive reduction in spend. You'll see same quarter last year pushing towards kind of $2 million in net cash, in net marketing that's been reduced well under kind of $1 million and still able to grow. The wonkiness in the shipments are impacting some of our ex-factory sales. But retail sales, continuing to be really strong in our primary market of Canada. Gross margin, you can see, a big pop, 23% up, so we see that normalizing well above 60, which is obviously fantastic when you're coupling revenue growth with gross margin growth. That eats into your OPEX really, really quickly. So just looking ahead, this is a slide we actually kind of presented, last couple of updates. It's really just to show the trajectory the business has been on and the milestones we've hit on the way through. So 2018 is when I started in the business. You can see there the first little with the Canadian flag, 4 SKUs on shelf at Shoppers Drug Mart. Fast forward to today, we've got 14 SKUs on shelf. And so we see a lot of businesses on the ASX, micro cap businesses with, 10, 20 mil valuations with no revenue, yeah? And this is a business that's got 10 million US in revenue, very significant distribution across US and Canada, gaining distribution now in the UK, and plenty of runway ahead in terms of both category size and our space within it. We've still got expansion into major US retail that we've barely scratched the surface on. Our number one customer in America remains Amazon, and so we still have plenty of store expansion to go. Our Hydralyte Plus range is our best-selling format in America. The SKU, which is called our liver support SKU, launched last year. The one that's actually right in the middle of that table. It now sells $2,000 to $3,000 a day, so it's $1 million SKU on its own, running through Amazon. And so there's so much upside with the brand in terms of retailer expansion, other market expansion, and some of the things we want to share today was what we're doing from a ready-to-drink perspective. These are some great highlights from the business, showing some innovation. These are new sports tablets. New sportier flavors designed to kind of talk to the sports consumer. We had Prime Day, probably heard of Amazon Prime Day, that was in July. The brand did about, 160,000 bucks in 2 days on Amazon up there. We were the number 1 and number 3 item in the category in Canada, and these sport tablets were the best-selling single flavor. So these are brand new SKUs, are only 9 months old, and they're already our best-selling single flavor. And really complementing what we're doing with those variety packs. So this is a really significant change that can't be sort of underestimated. It's government approval on 2 new formulations. It's extremely hard to enter the Canadian market with health and wellness products that are clinically based and have science-based claims on the front. If you're going to make serious claims in Canada, it has to be approved by the regulator. Same as in Australia, although the process in Canada is actually a little bit more vigorous than what you're used to in Australia. America's no rules, no reg, unlimited upside, but Canada is a very controlled, highly regulated market. And we've actually been working on these formulation approvals for over 2 years. And when we just got granted what's literally called a product license. So this product license has just come into the business in the last couple of weeks. One is for our best-selling immune booster and one is for our best-selling collagen booster. And that'll complement the prebiotic hydration plus item that we have in market in Canada at the moment, which was one of the fastest growing SKUs in the category. Well, it literally was the fastest growing in products doing over 100 grand. So really significant milestone for product launches next year. Talking a bit about what's going on in the category up there. We have the number 2 position in the category. The category quadrupled, between 2021 and 2023. We think it'll normalise to over 150 million. We did a broad-based snapshot on brands up there in Canada, including BioSteel for the first time, which is really more like a Gatorade. But we're kind of encroaching in our space from a powder and liquid point of view. As it turned out, we were outselling them kind of 2 to 1 in powders and tablets, but they amassed a pretty significant dent in Gatorade sales in their ready-to-drink space. So the brand is brand I mentioned, BioSteel. If you Google BioSteel, you'll notice they sensationally filed for bankruptcy about a month ago and are technically up for sale. So irrespective of what happens with them, they were doing $70 million, mainly in ready-to-drinks in Canada. So it really opened our eyes for what's possible in this ready-to-drink space. So we were presenting to the retailers recently about the opportunity of kind of us versus them. And you'll see here we lean slightly female. We're the brand up the top. We lean sort of more family. 35 to 44 is our biggest demographic. We market to all usage occasions, and the wonderful Shay Mitchell is our kind of marketing partner. BioSteel is much more anchored in athletic performance. It leans male, young males under 35 years of age. We like the statistic where they had a bunch of famous brand partners who are pro athletes from pro football, pro baseball, pro hockey, or ice hockey. The top 10 influences they had combined were nothing on the scale of Shay Mitchell. So retailers have really resonated with this. I'm literally in Chicago at the moment. I've been to Toronto once a week for 3 weeks in a row, presenting to the biggest retailers in Canada about our launch plans for this. And the reception has been exceptional, notwithstanding the fact that BioSteel has so famously filed for bankruptcy, and that's opened the window for us as the premier brand in this space, but they like, irrespective of if BioSteel continues, the fact that we've got a brand that's more kind of unisex rather than kind of hardcore sport, and is hitting a slightly older demo, which lines up much more with the classic consumer that's in their stores every day. So we'll be looking at this to be launching kind of middle of next year. It'll be our classic rapid rehydration formula, but with a slightly kind of more innovative mix. These are the kind of players we kind of go up against. You've all heard of Prime. I'm sure half your kids are drinking Prime in Australia. It's only 2.5 Red Bulls worth of caffeine, by the way. And so, we'll be kind of really nudging up against the big guys with the Gatorades and now the BioSteels. So we're looking at these Tetra Paks as an option as well. We love the kind of sustainability and the point of difference than the classic single-use plastic, and will be an all-natural formula. And pretty excited about what's going to happen in next year. And the buy-in from retail, this is literally a slide that I've been presenting in Canada the last couple of weeks, and it's been exceptional in terms of the feedback. And so we're pretty excited about where this is heading. A lot of people have been asking me about Shane Mitchell and the value she's been driving for the brand. We put together this kind of calculation the other day, which was how much intangible, well, not even intangible, how much tangible dollar value had she driven outside of sales. You guys all saw that we launched a collab product with us. The thing about that is it's one flavor. Yeah, we got 20 SKUs in US, probably over 30 SKUs in US, and about 20 SKUs in Canada. She, at the end of the day, is now 2 flavors amongst all of those. It's not necessarily that she drives sales across one particular product. She drives brand. She drives the product across the entire brand. Consumers choose the flavor they want. So, if you think about the stack of the way marketing works, Shay sits at the top as a brand voice. She is the voice of the brand. She's the young mum on the move. She's traveling. She's working hard. She's doing her. She's got 2 young kids. She's an actress. She's got a tequila company and a luggage company, and so she's really exhibiting all the things that lead to a busy, dehydrated lifestyle. But even in the time that we've been working with her, she's generated more than or up to $3 million of value across social media influence and kind of intangible PR value. You got to remember, with working with someone at the caliber of this, if you're just like Huggies nappies and you want Shay to post, Shay will charge you $250,000 to post. So that's the kind of, and if you see how many times she's posted, she probably posted, I don't know, 30 times this summer. So she's been incredibly supportive of the brand. We're lucky to have her. The impact she has at retail in Canada is unprecedented. Her voice and support of the brand up there. She's the 5th most followed Canadian of all Canadians. So you could imagine the kind of impact she has up there. It's it's the equivalent of having Hugh Jackman in Australia as the voice of your brand. Everyone kind of wakes up and pays attention. So as I mentioned at the beginning, we've got North America as our focus, but plenty of action in the rest of the world. We just had an appointment of Rue Life as a Chinese partner. Massive reduction in expenses in running a Tmall store and also bricks and mortar opportunity with them. And then UK has been really interesting. We're tracking north of 50 grand a month there at the moment. We have a $70,000 month in summer before we ran out of stock up there. It's been incredible. All the Aussies that live in the UK, the brand has serious cachet over there, and it's actually our cheapest cost of growth. So we're if we think about opportunities that we're most optimistic about, the UK's right up there. So that's kind of it for presentation point of view. Throw it open for Q&A at the moment, and happy to answer any questions everyone's got. Alex?
Thanks, Ollie. Look, the first question, just on the ready-to-drink range. Can you talk us through the steps towards product development for the RTD range? What steps need to be taken to get these on shelves? And do you foresee any issues here?
Yeah, there's always issues. That's why we have people working on it. So there's never-ending issues when you're running a business like this. But the steps we have to take, we're in a flavour development process. You cannot underestimate the importance of getting the flavour right. BioSteel wiped out in America because of poor flavour. So you got to get the flavour right, and we've nailed 80% of the flavours in our proposed range. We then have to get them on shelf life trials. So we've got to validate that the formulation in the Tetra Pak can survive a shelf life. So they go into what's called an accelerated stability. Stability is just a fancy word for a shelf life. So you got to validate your shelf life, prove that to the regulator, and then you'll be able to launch. And they're the 2 major steps that we have to undertake to get there. So once these are on stability, which we expect in the coming months, we hope that'll then give us the data to enable us to launch at the beginning of, somewhere around the first half of next year. Of course, anything can happen, delays are possible, but that's what we're targeting.
Thanks, Ollie. Now, with the expansion into China via Rue Life, what additional costs can you see increasing to cater for this new market? other than product and manufacturing? And I guess additional staff required, and will more be spent on marketing?
No is the answer to that. No more staff, no extra costs. The wonder of China is, the original China opportunity is you're selling the same stock you've already got. It's going into a free trade zone and the consumer's importing it online. So it's literally just a sticker in a warehouse. So no massive inventory build. We've actually got China on, the kind of, not necessarily autopilot, but as low as possibly can go before we see, an opportunity there, and then we'll invest against it. We will, we're working on a regulatory process at the moment to enter China as a food. Technically, Hydralyte's a food, it has medical grade outcomes, but they're just food ingredients. Salt, sugar, and water are the three most important parts of it. So it's a really kind of safe but effective product, and so it can be sold as a food, which means you can leapfrog classic vitamin and supplement regulation processes. So we're just going to chip away at that slowly and see what they can bring us next year. We're much more bullish about the opportunity in the UK in the short term.
So what other levers does the business have to reduce OPEX?
Look, I mean, you'd actually be surprised just how many one-off costs we had this year. We were just talking about it as a team earlier in the year about what costs we can continue to cut. We look at every cost all the time, every quarter, but when you look retrospectively and you're doing your budgets for the year, you'd be surprised how much money was spent on things like air freight, ability to move manufacturing from Europe over to Canada, other random regulatory stuff with new products launching. But we've definitely had a heavier OPEX than we would have anticipated this year, and we expect some elements of those to fall off next year. Biggest part of that being freight costs. Now we're shipping out of Canada. So that's a kind of like, a kind of grey cost that's going to come out in our in next year. And then, continue driving sales into these new categories with Tetra Paks, which is pure incrementality. You're talking about a completely different side of the store, completely different consumer walking in for a different need state. So that's the kind of thing where we don't have to spend a radical different amount of money to get things going, and the volume, in terms of the opportunity is likely to be much larger.
You gave some detail on the factory and logistical changes that disrupted sales during the quarter. Is that due to insufficient stock, less group focus on sales, or something else?
Definitely not less focus on sales. We're definitely a heavily sales-focused organisation. It's mainly due to out of stocks. So Prime days, we sold 160 grand a day on Prime Day. That's a couple of weeks of stock that was far greater than we could have ever anticipated. When you combine that with moving the manufacturing, you just inevitably have out of stocks. And 2 weeks of a quarter, is significant. So it's a sixth in terms of what your ability to grow in that market. So Amazon Canada is our fastest growing business by a mile, and we were out of stock for a couple of weeks in that quarter. So that's a part of it. And then moving like vendor relationships and the way that we sell into a retailer and the factory that we ship out of, it's really, really disruptive. So it's really just a matter of orders being, short during a quarter, just getting everything squeaky clean and automated again. So that's almost kind of, I call it 90% there now, and will be 100% in the coming weeks.
Almost 2 months after the company recommenced expansion into China through RuLife, can you just talk us through the growth you're experiencing in that region, if any, and how would you measure the success of this expansion?
Look, like I said, China is really there to kind of be on the lowest touch possible to see if we can enter through what we call normal trade. So I'd be much more excited about what's going on in the UK. We're selling 5 times the volume through the UK at the moment than China, and it's growing significantly more. So I realise we've got a few RuLife questions, but the brand's much bigger in the UK, and I'd be much more interested in focusing on that.
So can you just address your runway of cash that's available and how long you expect this to last if you were to extend your debt levels to the maximum allowed? And what is that maximum?
Yeah, maximums, we're another 6.5 million at Pure Asset Managers, Pure Asset Management, who are our number one shareholder at their discretion. We have we have an existing debt facility in place. So 6.5 mil is, roughly 4 kind of Aussie, so 4 US, which gets us, really until the end of next year, depending on all the factors that can happen. So that's always been our plan, that we have a break-even vision in that timeline. Those Tetra Paks go a long way to kind of making that happen, and that's one of many funding options that remain on the table, and the business will continue to review best sources of funding into the near-term future.
Now, you mentioned the little metrics that you put in place to sort of measure the success of the Shay Mitchell campaign. What percentage of sales for the last quarter are attributed to the line of products that she's helped develop and promote?
Oh, not a lot. If you just think about her products alone, like I said, I feel like I've kind of covered this, what I was talking about before. Shay, Shay talks to the brand, so when someone visits, let's say you type in Shay Mitchell Hydralyte on Amazon, the first item will not necessarily even be the Shay Mitchell Hydralyte. Amazon will actually put in front of the consumer the product that sells the most from Hydralyte, because they know that's what's most likely to be bought. So you can't really do a kind of like for like. I'd have to go and calculate it, but it won't be very exciting numbers. It'd be like calculating one flavor in one country. It's not significant. The significant is really in the brand value that we get from her. You've got a market to sell, and she sort of sits at the top of the tree in terms of the voice of the brand. You have other influencers doing the work of explaining the product. We do a bunch of trade shows and sampling, and then you've got your classic ads that are happening. Either picture the catalog in the supermarket, and then the ads on Amazon, the ads on Google. That's what's kind of converting people. So not everyone sees a story on their Instagram and immediately kind of leaps off to buy. Now, it happens on Prime Day, but there's traffic coming in from everywhere on Prime Day. So she is just one of many sort of things that we use to promote the brand.
You mentioned that UK seems to be tracking well. Is this $50,000 on average, and is it also seasonal? And I guess, have you realised any supply issues here? And what order is this region in terms of importance?
Yeah, look, I would say it's the third most important at the moment. Canada, US, then UK. I mean, we did 70 grand in July before we quickly ran out of stock, because we're only doing 20 grand in March. So when you sort of 3.5x the business in 3 months, it's impossible to predict inventory at that level. So we quickly ran out of stock, but what's wonderful is the best sellers in Canada are the best sellers in the UK, and so we're able to manufacture much more quickly out of the facility in Canada, and we also have the facility in Europe still going as well. So we can plug inventory gaps much more effectively than we ever have before. And so now UK is up and running. That 50 grand is probably the average, but like I said, it did 70 in July. So we think of that as, if you think about that as a basic run rate, that's a 600 grand business. Just out of the UK, we're doing 10 mil at the moment. Yes, yeah? So it's 6% is running out of the UK right now. And so we think that's, going to contribute much more next year and be the fastest growing, call it, sub-region that we have.
Thanks, Ollie. A couple more questions to finish. Firstly, well done on the improved margins this quarter. Is this around the levels you expect to maintain, or can you see this going over 60%?
Yeah, we can definitely see it going over 60, because you've got the immediate shift of the broker. So that's, a couple of points straight out of the gate. Everything that now sells on them or through them or via them, I should say, is a couple of points in gross margin. One, they're also opening up higher gross margin accounts. So they're just much more predominantly powders, much fewer liquids. So we see this as something that continually drifts up. You always get whacked on gross margin, cost of goods variance, whether it be freight changes, write-offs, those kind of one-offs. But the actual core engine room of what's driving that gross margin, we continue to see it drifting up for sure.
And just one to finish, Ollie, broadly speaking, what initiatives are you implementing to accelerate growth and or sales into new markets?
Well, look, I feel like that question is probably not really. Yeah, I feel like I've covered a lot of the things in the slides and in the questions we've already asked. Like, we're not entering any more new markets. Yeah, there's 150 million up for grabs in Canada and 1.5 billion up for grabs in the US. Yeah, forgetting China and UK. So there's plenty going on here. New markets feels like easy sales, but the easiest sales come from places where you've got brand equity. We have a lot of brand equity in Canada, and we have a lot of brand equity in the US, we have a lot of brand equity in UK, and we're going to develop brand equity in China. I sound like I'm slow on China, but it's just a lot of questions about China, and our Canadian business is on fire, and I've been up in Toronto meeting the biggest retailers in Canada, that make Coles look small. I've been meeting with the presidents of their divisions for each of the last few weeks. So new markets are small bets on a big future, and immediate impact is bigger bets on where we know we're going to win sooner. And where we're going to win this fastest is Tetra in Canada, ready to drink in Canada.
Thanks, Ollie. Well, look, that's all the time we have today. Thank you all for joining me, and I'd also like to thank Ollie for presenting and taking the time to answer some questions. As I mentioned before, a recording of the webinar will be on HPC's website and social media platforms later today. Ollie, before I let you go, did you have any final comments to leave with us today?
No, I don't think so. Look, I know it's been a tough road for shareholders. There's no doubt it. The market's got absolutely smashed, and we've been a part of it. I think what's important is to recognise, quality. At the end of the day, we're a $10 million US, $10 million business producing over $5 million in US dollar gross margin. I mean, that's pretty significant when you think of the options in micro cap world. The investment profile of Hydralyte has never been better. It's remarkable, the valuation that we have versus the trajectory of the business. So all I can do is thank everyone for their patience, and we're doing everything we possibly can to continue to supercharge the business so we can all be rewarded in the future. That's our sole goal at the moment.
Well, that wraps it up for us here. Thank you, everyone. Have a great day. Ollie, always great to chat.
Good on you. Thanks, Alex. Thanks, everyone. Talk to you later.